Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. Lok Sabha passes the finance bill with 64 amendments without a debate, even as opposition parties continue chanting slogans. 20 new sections added to the bill, including a few significant tax changes. The Finance Bill 2023 deals a blow to debt mutual funds with equity investments below 35% of AUMs. Gains arising from investments in these funds made after the 1st of April 2023 will be taxed at the investor's slab rate, irrespective of the investment period. Indexation benefits also gone. The government hikes the securities transaction tax on futures and options by 25%. The Finance Ministry admits to a typographical error in the Finance Bill, which led to confusion. Tax on options hiked from 5,000 rupees for every 1 crore in turnover to 6,250 rupees. The proposal by life insurers to relax the taxation impact on policies with an annual premium of over 5 lakh rupees gets a snub, but the change in taxation on debt funds could give insurance products a fillip. Finance Bill doubles the tax on royalty, no relief from startups for angel tax provisions. A late sell-off on the Wall Street wipes out all gains. The Sensex down nearly 400. The Nifty loses over 130 points. All sectoral indices close in the red. Lok Sabha Speaker disqualifies Rahul Gandhi, a member of the lower house, following his conviction in a 2019 criminal defamation case. Gandhi says he's fighting for the voice of India and is willing to pay every price. 14 political parties moved the Supreme Court alleging misuse of central agencies like the CBI and ED to target opposition parties. Petitioners seek pre-arrest guidelines. The Chief Justice agrees to hear their plea on the 5th of April. Twitter will remove the legacy verification badge from the 1st of April. The blue tick in India will cost 6,800 rupees annually.
Don't show any placards, please. Item number 19, Finance Bill.
I beg to move that the Finance Bill 2023 as amended be passed.
जो सदस्य इसके पक्ष में वो हाँ कहे, प्रस्ताव स्वीकृत हुआ और विधेयक यथासंशोधित पारित हुआ।
64 amendments, 20 new sections and 230 pages. That is the Finance Bill 2023, and it was passed without any debate in Parliament amid sloganeering by opposition parties. The changes to the Finance Bill include a hike in securities transaction tax, which did leave investors confused. We also saw a body blow to debt mutual funds, some respite for life insurance companies, but no relief for startups on the issue of angel tax. Surabhi joins us now to wrap up the key highlights of the Finance Bill, which was passed by Parliament. Surabhi.
Well, let me run quickly through some of the key amendments that have been passed today. These are, of course, amendments that have happened, and I'll also talk about what hasn't changed because it's important from a market standpoint. First, the big one, the change in the taxation regime for debt mutual funds. Actually, it's not just debt funds. Even gold funds get impacted, and even fund of funds get impacted. Why? Because now any mutual fund which has less than 35% of its assets invested in domestic Indian equities will no longer enjoy the indexation benefit. The taxation is going to be on a short-term basis, which basically means you get taxed at your slab rate. And that would be a big blow for the debt fund industry. That's the big one, the big headline. The second point is actually good news coming in for the offshore banking units at IFSC or GIFT City. There is an enhanced tax benefit that's come in because up until now, a new entity that was setting up shop in GIFT City, a new offshore banking unit, would get a complete tax exemption on income for the first 5 years and then a 50% exemption on the income for the next 5 years. Now this has been enhanced all the way up to 10 years, so 100% deduction on income for 10 years from the time of setting up at GIFT. Let's move to the third one, and this is quite important, specifically when it comes to royalty that Indian companies are paying to overseas entities, non-resident entities or foreign companies. The rate of tax on this royalty has been doubled from 10% to 20%. And why is this important? Because the foreign companies that currently do not enjoy any treaty benefits, the double taxation avoidance treaty, for them the tax incidence will go up. And even the ones who want to take the treaty benefits will have to ensure that they meet all the filing requirements, they file their income tax returns to be eligible for the lower rate of tax as prescribed in that treaty. So we need to watch for a lot of the royalty payouts that go to foreign companies. Then what has not moved, and this is also important from a market standpoint, just to recap, absolutely no change on insurance. So for non-par policies, the cap stands at 5 lakhs for a year. It has not been increased to 6 or 7 lakhs as the industry was hoping for. Also, there is no change in taxation with respect to REITs or InvITs. What the budget had done on the 1st of February is that repayment of loans was a manner in which REITs were distributing the interest income to the end investors. This was more tax efficient, and this has been plugged, and no changes in the final amendments that have been moved today. So basically, this will be taxed as income under other sources and not as capital gains. There was a lot of representation that changed it to capital gains. That would have been more tax efficient, but the Finance Ministry has not obliged. Last but not the least, also no change with respect to the reinvestment of capital gains in residential property. Remember, the budget had introduced a cap of 10 crore rupees. You cannot reinvest in residential houses above 10 crores if you want to get the reinvestment of capital gains benefit, and that cap remains on some of these high-value residential properties. So those are some of the key amendments, what has changed, and some of the changes that have not been made, which will apply from the 1st of April.
Well, thanks very much, Surabhi. It almost felt like a mini budget this afternoon, minus the finance minister's speech. But let's now dive deeper into the changes that Surabhi was talking about that have been made to the debt mutual fund industry. Indexation benefits are gone if equity investments are below 35% of AUMs. All tax benefits have been done away with. Pavitra joins us now to explain the changes and the impact on industry. Shell-shocked. That was the reaction that came in this morning from industry, Pavitra.
So this is a big development that has come through, and it's really a blow to the debt mutual fund category. First, let me just take you through the basic news. The finance bill says that mutual fund investments where not more than 35% is invested in equity shares of an Indian company will be considered as short-term capital gains. This is on redemption. Now, this is applicable on all investments made on or after the 1st of April of this year, of 2023. So the funds which really could be most impacted include debt funds, gold funds, and international funds. Currently, all of these are taxed at a different rate. The short-term capital gains at slab rate of any individual or corporation, but the long-term capital gains were taxed at 20%, and then there was that big indexation benefit which was available. So right now, what is happening is not only is this the removal of indexation benefit, but these will also be taxed at the marginal rate, which would be the slab rate. So that is what has really come through. Additionally, grandfathering will not be extended to market-linked debentures. So that's another point that we do have to keep in mind. Of course, the industry is not happy with this amendment. It's in fact come as a complete surprise. And everybody agrees across the board that this is a huge setback to the gold, debt, as well as the international fund categories. So we have been speaking to experts, and what they say is that indexation was one of the main reasons why someone would invest in these categories in the first place, right? That is in gold, international, or debt. Now, if you take that away, it is, of course, a big negative. Experts believe that in this context, money may now move to sovereign gold bonds and back to, say, fixed deposits or NCDs in debt. Also, another point to note is that retail investors are currently not that big in the fixed income category. Who is big is the institutional clients as well as HNIs, who will likely be hit much harder. But all in all, everyone that I've spoken to really agreeing that this is a big hit that's come through to the entire mutual fund space.
Pavitra, many thanks for joining us. Well, the government defended the tax changes to debt mutual funds. Finance Secretary TV Somanathan said the move brings it at par with other instruments of similar nature. But the mutual fund industry says the move comes as a surprise and it will make representations to the government. Remember, the bill has now been passed. Top corporate leaders say they will have to relook at their allocation to debt mutual funds given this development.
Isn't it interest? What do you get in debt mutual funds? You get share capital gains or you get debt interest. Parity with instruments which are of a similar nature. Income earning instruments should be treated as income earning instruments, and that is the direction in which it has gone.
The larger purpose that it caters to the market, in addition to the development of the market, is when the price discovery mechanism become more efficient because of the larger participation coming from the mutual funds over a period of time. And mark to market. There's a mark to market, therefore nobody of course gets any return which is a linear kind of return or guaranteed kind of return, unlike FDs. But definitely it helps over a period of time generate the return on the base of the investment that is being made across credit maturities, across credit profiles, across maturities. So therefore, first and foremost, it came as a surprise given the fact nothing was part of the budget discussion. As a result of that, hybrid funds would become the way of the mutual fund. That could definitely come.
It is very difficult to predict. Perhaps maybe we'll have to wait and watch how really it makes a difference as far as the deposit climate is concerned for the banking system. That capital market is a very shallow market as of now. So even if I don't think so, it will have any significant impact in terms of the corporates reaching out or newer corporates coming to us. I think it will have very nominal impact, nothing very significant.
Mutual fund is an avenue as far as the corporates are concerned to reduce their tax burden. In my view, I think they have to relook as regards to the overall routing of funding by corporates through mutual funds. So if this arbitrage is taken away, then not only the mutual funds will not be able to deploy these funds, but the corporates also will not be able to comply with this restriction, with this condition. So therefore, I think Government of India has to look at as regards to the taking away the capital gain tax benefit, indexation benefit.
Well, reactions coming into the changes that have been made as far as debt mutual funds are concerned. The one change that Surabhi did not talk about was the hike in the securities transaction tax, and that was because there was plenty of confusion, which now stands clarified. The finance bill has hiked the STT on the sale of futures and options by 25%. Earlier, the tax was at 1,000 rupees on a turnover of 1 crore rupees. That has now been hiked to 1,250 rupees. The tax hike on options was the one that left the market confused. The Finance Ministry has now admitted to a typographical error in the finance bill, something that experts were pointing out here on CNBC-TV18. So now the tax on sale of options with a turnover of 1 crore has been increased from 5,000 rupees to 6,250 rupees. Here's the Finance Secretary on the error that caused confusion in the markets.
Rate increase is from 0.05 to 0.06. It's a 25% increase in the rate. It's a typographical, there's a routine procedure for it. The rate is 0.05 to 0.06.
A typo error, a correction and a clarification coming in. Now, the proposal by life insurers to relax the taxation impact on policies with an annual premium of 5 lakh rupees was snubbed by the Finance Ministry. But the change in taxation on debt funds could give insurance products a fillip. Yash is here, so some disappointment, but perhaps something to cheer about as well, Yash.
Well, the details from the finance bill have been disappointing for life insurance companies. Both the amendments sought by life insurance companies around taxation on large long-term savings policies have not been admitted. There has been no raise in the tax threshold of 5 lakh rupees. Also, no indexation benefit has been given to life insurance companies for computation of tax. But the move to take away indexation benefit away from debt mutual funds has been a blessing in disguise for life insurance companies. Why? As per industry experts, there are 3 reasons for it. The first one is that it will ensure that longer savings life insurance policies have better internal rate of return. The IRR on long-term savings life insurance policies is anywhere between 6.5% to 7%, whereas for debt mutual funds, it's about 60 to 80 basis points lower. Now, the budget announcement on taxing these life insurance policies would have taken away this arbitrage of 60 to 80 basis points. But now, with indexation benefit being taken away from debt mutual funds, long-term savings life insurance policies will still have that arbitrage of 60 to 80 basis points in their favor. Second point is the disadvantage on reinvestments. Long-term savings life insurance policies are of the tenure between 10 to 15 years, and if the tax is to be paid on the maturity, then it will have to be paid in the 10th or the 15th year, and just once during the entire term of the policy. Whereas debt mutual funds, these schemes are about 3 to 4 year products, and if the money coming from the redemption is to be reinvested, then it will be subject to taxation every 3 to 4 years. The final point is the threshold for taxation. In long-term savings life insurance policies, there is a tax only if the annual premium exceeds 5 lakh rupees, whereas under debt mutual funds, there will be tax irrespective of the amount which is to be invested.
Yash, many thanks for joining us. A quick check of the market action now. The Sensex and the Nifty lost early gains, ending in the red. The Sensex lost nearly 400 points. The Nifty was down 130. All sectoral indices ending in the red, with metal and real estate stocks leading the decline. For the week, the Sensex and the Nifty lost nearly 1%. This is the third consecutive weekly loss for the stock markets. Bank shares across Europe and the US have fallen sharply in early trade amidst worries over the financial strength of the sector. Today's trigger was a sharp fall in Deutsche Bank shares. This after a spike in the cost of insuring it against a default. Credit default swaps of Deutsche Bank hitting a 4-year high, spooking sentiment. The Forbes India Leadership Awards held in Mumbai today. Isha Ambani, who's been leading Reliance retail business, was honoured as the Gen Next entrepreneur. Abhay Soi of Max Healthcare was named Entrepreneur of the Year, and C.K. Venkatraman of Titan was named CEO of the Year. We leave you with these visuals, and we're back in 2.
She wants to dominate every aspect of India's $800 billion retail market. Like her father, she too has a nose for opportunities. Ajio.com, a digital marketplace for fashion and lifestyle products, is now the #1 branded apparel business by revenue. She was instrumental in launching JioMart in 2019, and I quote, "The entire purpose of the retail venture was to create a homemade, truly India solution for every Indian problem. We live by the motto, what is good for India is good for Reliance," she said. Isha Ambani is steering the growth of Reliance Retail Ventures Limited, the country's biggest retailer by revenues, and is the Gen Next Entrepreneur of Forbes India Leadership Awards 2023. Ladies and gentlemen, a huge round of applause for Isha Ambani. Ladies and gentlemen, keep the applause going. Isha Ambani, the Gen Next Entrepreneur. Isha, we request you to kindly say a few words at the podium, please. Thank you so much for doing the honors. Thank you so much.
Thank you so much. This is to my parents who inspire me endlessly, and to my children, Prithvi, Adya and Krishna, who motivate me every day. Thank you.
Ladies and gentlemen, Isha Ambani, Director, Reliance Retail Ventures. She's the Gen Next Entrepreneur of Forbes India Leadership Awards 2023. This first-generation entrepreneur acquired and turned around Max Healthcare, making it the second largest hospital chain in India. Please welcome Abhay Soi, Chairman and Managing Director, Max Healthcare. Congratulations. Abhay, if you would like to say a few words.
The big national story, Lok Sabha Speaker has disqualified Rahul Gandhi as a member of the lower house a day after he was convicted in a 2019 criminal defamation case by a Surat court. The Congress says it's evaluating options to contest the disqualification. The Lok Sabha Secretariat cited Article 102 of the Constitution and Section 8 of the Representation of People Act for the disqualification, under which a convicted MP shall continue to be disqualified for a period of 6 years after release from jail. Responding to his disqualification, Rahul Gandhi tweeted, and I quote, "I'm fighting for the voice of India. I'm ready to pay every price." End of quote.
उनको सत्य बोलने के लिए
वो राहुल जी को डिस्क्वालीफाई करने के लिए सारे प्रयास किए हैं और सच बोलने वालों को लोकतंत्र के उसूलों के अनुसार और संविधान के तहत और उसकी रक्षा के लिए और जनता के हकूक के लिए लड़ने वालों का मुंह बंद करने के लिए उनको सदन से बाहर डाला गया है।
राहुल जी कहते थे दुर्भाग्य से सांसद हूं, अनफॉर्चुनेटली आई एम एन एमपी। सो उनको जो एक दुर्भाग्य लगता था आज उससे भी मुक्ति मिल गई है। एक भी आज तक प्राइवेट मेंबर बिल तो लाने की बात दूर, लेकिन अपनी ही सरकार में 2013 में ऑर्डिनेंस को भरे चौराहे पर फाड़ देने का काम और नॉनसेंस बोलने का काम ये श्रीमान राहुल गांधी जी ने किया।
जिस तरह से उनकी सदस्यता बर्खास्त की गई है वो एक कायराना हरकत है, वो एक डरी हुई सरकार की निशानी है। लेकिन देश के लिए पूरा आजकल देश के अंदर जो चल रहा है वो देश के लिए बहुत खतरनाक है। पूरे देश से ये एक ऐसा माहौल बनाना चाहते हैं कि देश में बस एक ही पार्टी बचे, वन नेशन वन पार्टी।
The BJP are desperate to silence the voice of the opposition. We know they are desperate. We know they want to silence the voice. We know they would go to all kinds of lows, but this is the low of the low, the lowest since 1950.
And the Congress party saying that they will exercise all legal and political options. Now, 14 political parties led by the Congress have moved the Supreme Court, alleging misuse of central agencies by the government to suppress any criticism. The plea will be heard on the 5th of April. The parties are seeking pre- and post-arrest guidelines for central probe agencies like the CBI and the Enforcement Directorate. A quick check of some of the other corporate headlines. Just 3 days after announcing a fourth dividend for the year, Vedanta is likely to consider a fifth interim dividend for FY23. A board of directors will meet on the 28th of March to take a final call. If declared, the record date to determine eligible shareholders is being fixed for the 7th of April. 5 senior executives at Nykaa have resigned. Among the exits are Chief Commercial Operations Officer Manoj Gandhi, the Chief Business Officer of Fashion Division Gopal Asthana, and the Chief Executive Officer of the Wholesale Business Vikas Gupta. A Nykaa spokesperson told CNBC-TV18, and we quote, "We see some of these mid-level exits as a part of the standard annual appraisal and transition process," end of quote. United States World Bank presidential nominee Ajay Banga has tested positive for COVID-19 during a routine test in New Delhi. According to the U.S. Embassy, he tested negative before departing for India. He is under quarantine and has not met any Indian counterparts yet. TikTok CEO appearing before the U.S. Congress amid concerns over security of TikTok users. The rounds of questioning over TikTok's parent company ByteDance related to digital privacy went on for over 5 hours, in which the CEO accepted that there is still some user data accessible to China. Social media company Twitter has announced it will start the removal of legacy verified ticks from the 1st of April. Previously, verified accounts will lose their blue check mark unless they start paying for it. The blue tick in India is slated to cost 6,800 rupees annually. This after Twitter CEO Elon Musk said in November last year that there are many corrupt legacy verified check marks that exist on Twitter and that the company plans on removing them. Meanwhile, Twitter founder Jack Dorsey's net worth fell by more than $500 million after financial research firm Hindenburg accused his company Block of frictionless fraud. This was the worst single-day decline in his fortune since May of 2022. As of Thursday's close, Dorsey's wealth stood at over $4 billion. That's as per Bloomberg data. The Indian Patent Office has rejected Johnson & Johnson's attempt to extend its primary patent in India on its tuberculosis drug. The US pharma giant's patent on bedaquiline will expire this July. The ruling will pave the way for the entry of generic versions of the drug, reducing the cost of the 6-month treatment course by 80%. And speaking of important developments, Prime Minister Modi inaugurated the One World TB Summit in Varanasi today on International TB Day. The PM has rolled out shorter TB preventive treatments across India. Experts and pharma companies from around the world are in Varanasi to discuss ways to eradicate tuberculosis by 2030 and bring in more vaccines. Shivani Bazaz gets you this report.
here in Varanasi, where the Prime Minister has inaugurated the One World TB Summit. India is committed to eradicating tuberculosis by 2025. So what will be India's strategy to meet its 2025 target?
हर टीबी मरीज के लिए जरूरी केयर को ट्रैक करने के लिए हमने निक्षय पोर्टल बनाया है.
And in collaboration with the TrueNat manufacturers here, we announced a drop in the price for the rapid molecular test in such a way that one test went below $8.
The Prime Minister announced the rollout of the shorter tuberculosis preventive treatment and greater focus on testing, tracking, treating and use of technology in fighting TB.
Today, with technologies like TrueNat, which allow us to diagnose TB patients within a few weeks of infection, we have the ability to treat them very effectively and ensure that they don't spread TB to the community while they recover very quickly.
Health experts from around the world have expressed concerns about the reversal in progress against TB. The number of cases in 2021 was over 10.6 million, a 4.5 increase over 2020. Here in Varanasi, experts have emphasized on the need for renewed focus on surveillance, early diagnosis and accelerated vaccine development to meet the target of eradicating TB globally by 2030. With camera person Hruday Patra, this is Shivani Bajaj for CNBC-TV18.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. It is Friday, so we wrap this week up. And of course, we will be back on Monday with all the latest developments from India and around the world. Have a great weekend. Goodbye.